Let's discuss how to design a mutual funds portfolio. In this video, we would discuss basics of portfolios. Okay, and let's continue from here. In this video, we will discuss how to design a mutual fund portfolio, and this is a short video on a section of the designing strategy of basics of portfolios. So we're trying to build up some basics before we get into designing a portfolio. These are my background I need to cover before I will go into designing the portfolio. Let's continue. We're next section here. In this section, we will discuss basics of portfolios. Okay, let's continue. And then simple. After that, we do sample model portfolios. Then after that, rules of thumb for portfolio construction. After that, building passive portfolios. Then selecting funds. We'll do the really heavy duty work here. When you select the funds, then you are close to getting yourself a decent portfolio. Okay. Then build active portfolios. That will see how do we use selected funds to build active portfolios using these rules of thumb. Let's continue here. Then you see a portfolios designed by an engineer. I'll show you how I design a portfolio and give you. Let's continue with the basics. And topics we will cover here are who can benefit, who is the target audience. Okay. Next is what's a portfolio. Next is what are core and satellite assets in a portfolio. And what are strategic and tactical investing styles. And what's a passive portfolio. What's the next? Let's continue. Who can benefit? Audience. Who can benefit from this presentation? Let's continue here. If this presentation is for DIY, do-it-yourself folks who haven't done any mutual funds portfolios before. It's for those folks, do it yourself. Okay? After section on building passive portfolios, a user can put together a respectable passive portfolio. Okay, continue. After section on building active portfolios, a user should be able to design a decent active portfolio. After section on portfolio design by an engineer, a user can see how I do portfolios to achieve respectable returns at acceptable risk. For me, its risks is more important than returns. We want to reduce the risk and try to achieve a respectable returns at a reduced risk, which is a standard deviation. Okay. Now we'll discuss. We already talked about who can benefit. This section we would see what is a portfolio. Let's continue here. We know that there are basic assets like equities and debt, and there are also alternate assets too. In the investing world, a portfolio is a collection of assets to deliver best returns at a reduced risk. We are trying to design a portfolio to deliver best returns and at a least risk. Risk as is measured by standard deviation. Let's continue. As you proceed through the presentation, I will introduce you to various model portfolios available online. You may use one of those portfolios without any changes, or you may also try to improve on these model portfolios. Let's continue. A basic portfolio is a collection of various assets to satisfy investors' desire of decent return at acceptable risk, which is also tolerable. Let's continue here. So in this section, we'll talk about what are core and satellite assets in a portfolio. Okay, let's continue. What's core asset? What's a core? This is structure of a portfolio. Core makes the structure of the portfolio. It usually consists of large cap US value and blend funds and may include large cap foreign value and blend funds also. Let's continue here. On the bond side, these are the bond funds of intermediate duration or total return type bond. Let's talk about satellite assets. Okay, what's satellite? These assets hang on to the structure of a portfolio like ornaments hang on to a Christmas tree. and their purpose is to enhance returns, okay, and provide diversification and maybe reduce standard deviation. Okay. Generally, small caps outperform large caps, so addition of small cap would improve the returns. Gold holds value during uncertainty, so it would hold values, and also gold does not correlate well with either with equities or with the debt, so this also would reduce the standard deviation. Okay, provide the diversification, of course. Okay, let's continue here. Commodities do well in inflationary environment, and also commodities do not correlate well either with debt or with equities, so they also help provide diversification and reduce standard deviation. Okay, let's continue. Okay, let's continue. Okay, so examples of satellite funds would be large growth stocks, because core stocks are large value and blend stocks, mid caps and small cap stocks, international, especially emerging market stocks, junk bonds, high yield bonds. Okay, let's continue here. Real estate, okay, which is alternate asset. Okay, commodities, precious metals, managed futures, market neutral strategies, hedging strategies, and some more. Okay, like that. Let's continue from here. Now let's continue next section here. In this section, we would talk about what are strategic and technical investing styles. Okay, we already talked about core and satellite. Now we would talk about strategic and technical. Let's continue here. We also have these strategic and tactical investing styles also, or assets. Okay, let's continue here. This is part of portfolio which you design to reach your goals. This is the main portfolio. Okay, so bulk of the portfolio is strategic portfolio. Okay, let's continue here. Tactically, this is part of portfolio which takes advantage of currently available opportunities. Okay, this is opportunistic portfolio, and this is a main portfolio, strategic portfolio. Let's continue here. Let's continue. Example would be, years ago there was a poison-laced Tylenol scare, and investors had overreacted. That represented an opportunity to buy Johnson and Johnson. Let's continue here. In a buy out offer, if you believe that final closing price will be higher, you can buy the target company. That gives you an opportunity to make some money on this buyout offer. And if you believe that deal will fall through, you can short the target company. And that, for example, at one time Microsoft was trying to buy Yahoo. Yahoo was asking for more money, and then Microsoft was willing to pay, and Microsoft just walked out of the deal. Okay, so in that case, Yahoo stock fell significantly on that announcement. So if you could sense that the that buyout offer would fall through, then you could have made money on shorting the Yahoo at that time. Let's continue here. When Carter was president, interest rates were high, and I believe that 30-year zero coupon represented an opportunity of a lifetime. Okay, at during those days, I was able to get 18% or so on a savings accounts. Okay, on CDs, some of the CDs I could get 18% or so. Okay? Even money markets I could get 18% in sometimes during those times. Okay, let's continue here. Okay, now we'll continue discuss the next section, which is what's a passive portfolio. And let's continue. We will now discuss what a passive portfolio is. What's a passive portfolio? This is a market-based portfolio. In these portfolios, managers do not make buy-sell decisions. These decisions, which is buy-sell decisions, are governed by the construction of the underlying index, underlying market. Let's continue from here. Within mutual funds portfolio universe, these are portfolios of index funds. So passive portfolios are portfolios of index funds. Let's continue. Here is an example. The simple investment portfolio at this location here, Kiplinger's portfolios list, is a passive portfolio. Okay. Simple investment portfolio at this location is a passive portfolio. Let's continue. Let's continue. Now we'll talk about what is an active portfolio. What's an active portfolio? What is an active portfolio? Within the universe of mutual funds portfolio, this is a portfolio actively managed funds. Okay, it's active because we are using actively managed funds to implement the portfolio. Let's continue here. And here's example. Schwarz portfolios at this location are active portfolios. Okay, let's continue from here.